I'm serious. Look at how bad of shape the banks are in before we even add on the 1.5 trillion in student loan failures right on top of it.
Welcome to Gold Silver Pros.
Hey everyone, this is 𝘎𝘀𝘾 at 𝘎𝑑�silverpros.com. Thanks for joining us on the channel. It is August 3rd, 2023. And you know, we're getting really close to the beginning of the school year. And I thought, what better way to celebrate the beginning of the school year than looking at the health of our school system? And I was just kind of browsing around. I came across a story that really kind of disturbed me. There is a $1.5 trillion ticking time bomb about to smash headlong into our economy at probably one of the worst times. And it has everything to do with, you guessed it, school and student loans. Yes, ladies and gentlemen, we're about to have an issue with student loan debt. And oh man, is this one a doozy. Let's get right into it. Got a PowerPoint presentation for you. Thought I'd have a nice, happy, idyllic scene of kids going back to school. Wonderful time of year. Adults get the kids out of the house. Kids get to go see their friends. It means we'll have the onset of fall here pretty soon. And the kids get to go and learn and develop and grow and all those wonderful things, except for when they get done with their schooling, especially after high school graduation, going to college, we have this problem called student loan debt, which is getting worse. And there have been a lot of screw-ups along the way. And the punchline is the students who now cannot get jobs in this economy are faced with paying back debt with what? And if they don't pay it back, what happens? Well, let's go through some of the numbers, ladies and gentlemen. Have a student loan debt, don't worry. It's all forgiven, right? Didn't we hear that in the news? But wait, did that actually go through, or did something happen at the Supreme Court? And well, at least we think so. What happened? Oh no, how the current administration lost the Supreme Court fight for student debt relief. They promised, but yet the Supreme Court said, well, that's kind of unconstitutional. You can't do that. And so, whoops, reverse course. We can't forgive all those student loans that we thought we were. And ladies and gentlemen, it's created a really big mess. 6 Democratic senators sent a letter to student loan servicers, and it said, that said, the biggest risk to borrowers, assuming they can avoid outright scams, might be time wasted on the administrative hassle related to setting up their accounts and choosing a repayment plan. Because you see, ladies and gentlemen, they stopped and started this thing so many times, even the servicers don't know what to do. And students are loaning into their servicer portals, and they're saying they don't owe this, or that somebody else is servicing it. And people are going like, who do I pay? When do I pay? Am I in default? The whole system is a mess. And when you stop and start something that's been in place for a while, you tend to screw up, and that's exactly what happened. Loan servicers, it says here, want to go full speed ahead, but they're concerned there isn't enough time to communicate with borrowers. Servicers process payments and help struggling borrowers figure out repayment plans. But it's just an IT problem. Don't worry. We'll get that school laptop fixed. Just take it down to the IT shop down the hall right next to the nurse. We're going to solve it. We promise. It's not an issue, except, well, it kind of is. And nobody knows when to pay or what to pay. Now, that in and of its own could cause problems, because when you have $1.5 trillion in debt due and nobody knows what they have to pay or when to pay or who the hell to pay, that would seem to indicate that that 1.5 trillion may be a bit in danger. And, trillion with a T, that's a pretty big number. How would that affect the rest of the economy? We'll get to that in just a moment, but stay tuned. We got more on this. It says here, and this is according to reporting by Bloomberg, the logistics are daunting. Many borrowers were assigned a new loan servicer after some of the biggest companies, such as Navient Corp, quit the federal program. They're not in the federal program? The Biden administration's failed attempt to forgive some of the debt has left some folks confused about whether they need to pay at all. Then there's bewilderment over income-driven repayment plans and the legions of scammers sure to be looking for easy marks amid the upheaval. It could be a mess. In fact, the 6 senators that wrote the letter to the servicer said this is a big concern. Scammers, who to pay, where to pay. How is this all going to work? You see, when you make a top-down decision to try to forgive student loan or change the system, and you have all these companies below it, they may not all get the memo or be equipped to deal with this rapid back and forth change, which is exactly what happened. when the Supreme Court rejected the original plan to forgive student loan debt. Now, the current administration is trying to use executive administrative powers to change some of the repayment terms, and that's what this slide is talking about. It's confusing as hell. And really, no one knows what they're supposed to do. Not the borrowers, not the government, and certainly not the servicers. So, maybe not a big deal. Maybe it is an IT problem. Maybe we'll figure out in a few months, everything will be okay, right? Just a teeny little problem. Don't worry so much about it, except, well, there was a study done by Morgan Stanley Research, and they're pointing out here households less prepared to make payment. You see, ladies and gentlemen, when people were told that they weren't going to have to repay their student loans, they might have spent that money elsewhere or breathed a big sigh of relief because they didn't have the money to pay them off anyway. And it's here, according to the slide, overall, over a third, 34% of people will not be able to make their monthly student loan payments. That's the purple part of the bar you see over on the left. And if you break it up by income strata, the second from the left bar has 47% of people making under 50,000 will not be able to make all of their monthly payments. Another 31% say that I will have enough money to make payments, but I'm going to have to stop spending elsewhere. Well, what does that imply? That money has to be pulled out from somewhere else in the economy. So when this $1.5 trillion student loan debt finally hits and they figure the whole thing out, 31% of people under 50,000 say they're going to stop paying for other things. 41% of people 50 to 99,000 say they're going to stop paying for other things. Overall in the economy, 37% say they'll stop paying for other things, and 34% can't pay for any of it. Of course, as you go up the income strata, more people can substitute or make those payments. But overall, the numbers don't look good. Well, wait a minute. So not only could we have issues with servicing that $1.5 trillion in student loans, which is a gigantor piece of this economy. Yes. What about the rest of the economy? Well, Morgan Stanley Research happened to do more in their study, and most and least exposed companies in our framework. So they figured out which companies are going to get hit the largest by the substitution effects we saw in this slide here. This little middle section of yellow people, they can pay student loans, but they got to stop spending on what? All of this stuff. So if you're Dick's Sporting Goods or Target or Ulta Beauty or Wayfair or any of these companies on the left, you're in deep crap because you just got a lot less money. It's going to hit your bottom line because these people can't shop there anymore. Auto parts, dollar stores, Kroger, and Walmart, the basics. I have to have a car and drive. I have to have groceries and clothes. And good Lord, if you can't afford the dollar store, you're really destitute. I'm serious. And I'm not making fun. The ones that are least exposed on the right because they're essential to daily life and not dying on the side of the road. And I'm not trying to be dramatic, but if you can't eat and you can't dress yourself, you're in serious trouble. But the guys on the left, if you're invested in their stocks, not your financial advisor, but you may want to take a look more closely at your investments if you're an investor. And if your executives running these types of companies, which are considered either more luxury or higher end or non-essential, which is a gigantic part of the economy, a lot of branding there, a lot of dollar flow there, they could be in serious trouble. This is going to affect the stock market. It's going to affect jobs at these types of companies. People are going to lose their jobs if companies aren't going to be able to hire as many people, or they may have to fire some. So the student loan problem is not only going to affect the student loan borrowers and the servicers and the government, it's going to affect the general economy in a big way. There are going to be a lot of second and third order effects of this $1.5 trillion student-led tsunami about to hit the economy. But wait, there's more. According to another study, the percent of loan borrowers in the sample 60 plus days delinquent on other credit products, meaning other stuff they have to pay, like auto loans, home loans, credit cards, any other credit product, is rising so that they can pay the freaking student loans. And this is before the forgiveness ends. What happens when the forgiveness period ends? Because the Supreme Court overturned it. Well, you're seeing, ladies and gentlemen, those numbers are going up. The former students or current students are not just going to default on their student loans, ladies and gentlemen. They're going to default on everything else. It's a domino effect, a cascade through the economy. Think about what I talked about on Tuesday with the banks. They're having issues keeping up. Okay. They don't have enough liquidity for their loan products. Who do you pay back on a loan product? You pay a bank. So when the student loan debt tsunami hits, the banks are going to have more pressure than even what I showed you on Tuesday, which was a snapshot of now before this 1.5 trillion gets lopped on top of that problem we saw on Tuesday. It gets worse, not better, not good. I'm sorry. I know it's back to school and it's such a positive time, but man, I got to report the news as I see it. And damn it, this is the news. That ain't good, ladies and gentlemen. But hey, don't worry, the banks can just print more money because we know how that's gone the last 110 years, right? You know, wink, wink, nudge, nudge. And of course, cite your sources. Sources, 2 from Bloomberg, 1 from Zero Hedge, who carried the story, and 1 from Consumer Finance. This chart's from Consumer Finance, by the way. And that is the tale of the tape. So, ladies and gentlemen, what does this mean? We'll add 2 and 2 together. I don't know how much of that 1.5 trillion is going to go bankrupt. But think about the mortgage crisis in 2007, 2008, and TARP programs and all those things designed to prevent the mortgage market from melting down. The student loan and the mortgage market are both huge, 2 of the biggest loan markets in the United States. Are we going to have another Lehman type event with banks because of student loan failures? Remember Tuesday, if you do not watch the live stream Tuesday, that is mandatory viewing right after you get off this video. Go right back to Tuesday and watch that live stream. I'm serious. Look at how bad of shape the banks are in before we even add on the 1.5 trillion in student loan failures right on top of it. You thought the loan to value ratios of the banks were scary before, the liquidity ratios were scary before, the potential failures of major banks, highly levered banks was a problem before, the fact that over 50% of all deposits in major commercial banks are uninsured, the fact that the FDIC can only insure 1% of all deposits anyway, and we're adding 1.5 trillion in potential debt failures on top of who loans the money to students. Oh, I don't know, the banks. Starting to get the picture? We're not out of it yet, ladies and gentlemen. The banks aren't out of it. The loan servicers aren't out of it. We are not out of it. Tougher times are coming ahead. And again, I know this is a wonderful time of year. It's summer. It's beautiful. We're thinking about getting back to school, the kids, learning, education. It's all important. Think about all the kids going to college for the first time, freshmen moving into their dorms, the excitement of moving away from their parents to live a life and explore and meet new friends. I'm not trying to be a Debbie Downer and all that, but goodness gracious, how do you ignore a $1.5 trillion program that could crash the banks? Just like the mortgage industry nearly crashed the banking system, not only the US, but the worldwide banking system in 2008. Will this be the black swan that crashes the banking system? I certainly hope not. But the Supreme Court said you couldn't do student loan forgiveness the way they wanted. So there's no easy answer around the bend. We got to figure this out. And how, I don't know. But it's a mess. And it's going to affect corporations. You saw in that graphic, many corporations in which are not the base level, think of Maslow's hierarchy of needs. You need food, you need water, you need shelter, you need sleep, you need clothing, okay? Those types of things. Outside of stores that serve that base need at the cheapest level possible, we're talking dollar stores, Walmart, Target. It's not where you're going to buy Armani, okay? And you're not buying caviar. You're not buying a boat. These are basic needs. Outside of them, the rest of the economy could be in serious trouble from these people that cannot pay back their loans or are trying to pay back their loans and can't shop for discretionary goods anymore. And if you're a corporation, you're looking at that going, holy crap, monkeys. Our products are a little bit higher priced. They're not necessarily bare essentials. We're going to get slammed by a huge segment of the economy that can no longer afford to shop there. And think about all the debt that the corporates have on their books. Think about when that debt goes bad. How many hits can this economy take, ladies and gentlemen? How many punches can a boxer take to the gut before he drops his hand and it's the big right cross and he gets knocked out? At some point, you take a punch to the gut, and you take a punch, and you take a punch, and you can take no more punches. How many punches can this economy take before it goes into serious crisis? And that is on the back of the Fed raising interest rates over the last year to year and a half, tightening monetary supply in the economy. They're not printing money, they're tightening it at a time when people don't have enough to pay already. And I'm not a big advocate for just printing money, but when you retract money at the same time, you're having major failures in the banking system and major problems with a big portion of the economy that are going to spread to people, to corporations, to the government. It's like a big, massive tsunami, tornado, hurricane, earthquake, all hitting the same point on Earth at the same time. It's a mega issue. I don't even know what to call it. I got to come up with a good name for this. I don't think we've ever seen this before, at least not in my lifetime. Not like this. Think about the headlines we had for 2008. What are the headlines going to be this time? It's going to be bigger. It's going to be bigger. And again, sorry to be a Debbie Downer, but man, I got to report the truth. That's what I do here. We do research to report the truth. Big questions. Leave your questions down, chat. We'll go answer them. And hope you guys, have your gold and silver, or however you're going to deal with this mess. I'm not your financial advisor, certainly. But as you're looking at this mess, what's going to hold value as the economy starts a downward spiral? More than likely to start in the banking system, honestly. Well, the issues will probably start in corporate America first, but the one that could take it all down is the banking system. And man, the pressures on the banks right now are flat out freaking enormous. They're enormous. And we had already in the spring the second, third, and fourth largest bank failures. And the government stepped in and bailed them out. Are they going to bail them out again? The FDIC doesn't have enough money. They're just going to print it. We're in quantitative tightening cycle. Is Powell going to reverse course? Don't know, man. The administration tried to forgive these loans. Supreme Court said, nah, sorry. What other recourses does the government have? I'm not saying forgiveness is good or bad, or printing money is good or bad. I'm just saying, how do we address the problem? I don't think we can this time, based on what we've already tried and what we're already doing. The Fed's already doing with the money supply. Man, it is a conundrum. It is a real conundrum. And all I got to say is, I'm going to continue to buy as much gold and silver as I can afford. I live on a fairly modest budget, work for myself, but I'm going to continue to buy. For me, that's the right thing to do. And I'm going to protect my kids as much as I can. Hopefully you're able to protect your kids as much as you can. But this is a seriously big issue, something I wanted to bring to your attention. Thank you guys so much for joining the program today. Don't leave. Go back and watch Tuesday's live stream. Even if you watched it, go watch it again. When you add this video to that, then you begin to see how complex, but how endemic these issues are to every aspect of the economy. It's not just a mortgage mess this time like it was 2008. It's an all over the place mess. That's what we call a cluster. This is a cluster. All right. The $1.5 trillion time bomb about to hit the economy. Yeah, that's it. Got your gold and silver? Man, I certainly hope so. Best of luck to you. Until next time, Rob King, Gold Silver Pros. Stay tuned Friday, weekly market wrap, where I go over gold and silver flows in the economy in detail. I give you the biggest stories of the week. And we look at the economic data and tell you where we've been and where we're likely going. Don't miss that. It's the most popular report on the channel consistently. It's what gets you in about 20 minutes up to date with what the heck is going on and helps you prepare for the next week and the next and the next. All right. Thanks, guys. Until next time.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.